let me ask first. Can everybody hear me okay?
Yeah.
No.
No? Okay, I'll use it then.
There you go. Can't hear you.
Okay. My name is Jim Arab. I'm with fairtax.org, Americans for Fair Taxation, District Director for Virginia's 2nd District. I thank all of you again coming out. And one of the most important things, especially now with the election cycle coming up, the coming year, if you do not know, our Congressman Scott Ridgel has co-sponsored H.R. 25, the fair tax. Back in March, he was the 60th co-sponsor. We now have 62 co-sponsors total. Scott said it himself. He knew that by doing the right thing and co-sponsoring H.R. 25, he was putting a target on it. Because H.R. 25, the fair tax, is very easy to demagogue. Commercials are canned. Congressman, fill in the name, wants to raise your taxes with his, risky scheme. One of the good pieces of news is that during the last election cycle, in several congressional races where these canned ads were run against co-sponsors, because the voters were informed, knew the difference between the mischaracterizations and the flat-out lies, there was such a pushback that opposition candidates actually were forced to retract their ads in several congressional races. Which was really amazing, and that was a testament to the grassroots and the rank and file within the party supporting their elected officials. So, that's one of the reasons why it was really important that I wanted to have the opportunity, and I wish Ken was here to thank him personally for giving me the opportunity to speak. So, fair tax, what is it? I'll give you the nutshell. What I'll do is explain some of the highlights to it, and then I'll open it up for Q&A. The fair tax, H.R. 25 in the House, S. 13 in the Senate, does away with the income tax system. All of the payroll taxes, the income tax, Social Security tax, Medicare tax, employer matching contributions, corporate income tax, capital gains taxes, the death tax, the inheritance tax, all of it gone, done away with. 72,000 pages of IRS rules and regulations thrown on the scrap heap of failed government policies. Me, I kind of like that. And it is replaced with a simple, fair, transparent national retail sales tax, a 23% consumption tax on new goods and services. Okay. Usually the first reaction when I say that is someone says, 23%? Oh no! Well, the most important concept to understand, and this is where it gets demagogued, the most important concept to understand, and then you realize, okay, that's not really that big a deal, is the concept of the embedded tax. Now, when you go down to the store, you buy a loaf of bread. It doesn't matter what you buy as a consumer. Part of the cost of the item you're buying is the embedded tax component. If you go buy a loaf of bread, part of the cost of that is the taxes that the baker is going to have to pay on his tax bill. He has to come up with that money somewhere, so he puts that into the cost of the bread. If he's got help and he's paying employer matching contributions, part of that goes into it. But it doesn't stop there. The truck driver who hauled the flour, part of his taxes go into the cost of the transportation. At the mill, the factory, the farmer who grew the wheat, all the way back to International Harvester who had to pay corporate income tax on the harvester that on the combine he sold to the farmer. All the way through the production chain, there are taxes in the form of income that get passed on to the end consumer, and it's reflected in a higher base price. Okay, taxes are no different than the cost of the flour. Nationally, on average, now it depends upon the actual market sector, but the average is just under 23%. It's like 22 point something or another. Is the embedded cost. For some products it's a little bit higher, for other products it's a little bit lower. But the national average is about 22%. Okay, so that's the idea of the embedded tax. Now, what will happen under the fair tax, those embedded costs go away. Market forces, competition will bring the base price of those goods and services down. You then add back in the fair tax, And for the most part, there will be some variation depending upon product sectors and different items, but for the most part, purchasing power items are still going to cost about the same after the fair tax as they do before the fair tax. Okay, pretty much across the board. It's revenue neutral. It changes how we fund the federal government. It doesn't lower the total amount of taxes. Well, then why bother to go through all of this? Okay, what's the purpose of it? Why the shift from income to consumption based? To me, this is probably one of the greatest single factors. It puts you, the individual, in complete and total control over how and when you pay your taxes. Okay? You are free to go out and work as hard as you want, as much as you want. You can work, earn, save, invest, grow to your heart's content, tax-free. You build the wealth. You want to go out and live the lifestyle. You want to buy the high-end luxury car? Well, you'll pay more tax than if you buy an economy car. But the difference is, it's your choice. Same percentage rate, but obviously you buy something more expensive, you'll pay more in tax. Your choice, not the federal government's. To me, that's empowerment. Here's something else. Suppose your situation is such, you're on a shoestring. You've got to make every dollar count. Transmission went out. You need to get some wheels. You need to get transportation. Go buy a used car. Again, the choice is yours because the fair tax only applies to new goods and services. Okay? If that alone is not a huge selling point, I don't know what is. Okay? 23%. One of the typical complaints, the arguments that people will say, sales taxes are regressive. They hurt the low income, they hurt the poor because their money goes to buying for the basic necessities, and now you're adding a tax that they're going to have to pay on top of that. The fair tax addresses this through what's called the prebate. Okay? The prebate is like a rebate on what a family would spend in fair tax amount up to the poverty level based on household size. Okay? It's not means tested, it's available to all legal households, and again, it's based on family size. And the numbers come, they're derived from the federal poverty levels that are already used to establish federal funding for all different types of aid programs. They already have these numbers in place. There's a small massaging that gets done to them to come up with the amount. On one of the handouts, there's, on one of the pages, there shows some breakdown of figures, I think it was for 2009, the fair tax amount, or excuse me, the prebate amount based on family size. Okay? Rather than going through all the numbers, one of the things that I like to do to help explain it, now the numbers are actually higher on the paper as far as the prebate amount, but what I like to do is, let's just say for the sake of argument, for the family size, the poverty level is deemed to be $24,000 a year. Okay, I like it because the numbers work out, the math is real nice. If it's $24,000 a year, that means for that family that earns $24,000, every penny goes to the basic necessities of life. Food, clothing, shelter. That's it. Everything goes just to at subsistence level, if you will. Okay? You take that $24,000, 23% of that is going to be, let me do it the other way. $2,000 a month is what the spending. Okay? $2,000 a month would be what's spent each month for that up to the poverty level. 23% of that, $460. I think the actual numbers for a family of four is up around $600 or something like that. Yes?
What happens with the state and county and city taxes? Because that's not, we don't pay just federal taxes.
Right.
So,
okay, the fair tax, it's a great question. I'll follow up more with that a little bit later on. The fair tax addresses federal income tax. Okay? It does not address state level, but there's an issue. We'll get more into that particular question a little bit later. Okay? But as I was saying, $2,400, or excuse me, $2,000 per month $460 would be the amount of the fair tax component that would be spent on $2,000 basic necessity of life. At the beginning of every month, that's the name prebate. Family of that size would receive either through automatic deposit, to a checking account, rechargeable debit cards. There's a whole myriad of ways in which it can be implemented, to $460. Okay, to cover the fair tax amount on the basic necessities of life, up to the poverty level. Okay. By not being means tested, it's fair. It applies to everyone. Okay. Another advantage is if you're in a position where you don't really need the prebate, if you're financially in a position where the prebate is not going to make that difference, or if philosophically you just don't want the federal government to know the size of your household, there's no requirement to file for it. It's your choice. If you want it, it is there to all legal residents. Okay, for all legal households, I should say. But there's not a mandate and a requirement to do that. So in this case, the fair tax protects the poor, and again, on one of the handouts, you'll even see that under the fair tax, because of the prebate, those at or below the poverty line actually end up with more real spending power than they do under our current tax system. Okay. Under the fair tax, it is progressive. Okay. Meaning that as you rise in income level, your spending levels go up, you're going to pay more tax. The difference is the fair tax broadens the tax base, and as a result, by bringing more people into the tax-paying system, overall effective rates are reduced across the board. The effective tax rate is less under the fair tax than it is under the income tax system. So I think that's another one that's a real strong plus. What will this do for the economy? And this is something that today people really is on a lot of people's minds with the economy and jobs. It was estimated it was between 11 and 13 trillion dollars. Okay, that's with the T. Trillion dollars, U.S. real dollars currency is invested offshore. Everything from foreign investments, foreign bank accounts, numbered Swiss accounts, okay, you name it, U.S. dollars that are offshore, and the reason they're offshore is one purpose: avoiding the tax man, avoiding the IRS. Under the fair tax, production, growth, earnings, investment is not taxed. Imagine, if you will, if only a percentage of that $13 trillion came back in, of real dollars, came back into the U.S. economy, what that would do for business and capital investment. If only $2 or $3 trillion, real dollars, was made available for business, the economy would explode. You would have economic growth that would be unheard. Compare that to the stimulus spending of printing more money and investing, okay, where it's just adding more debt to the future. This, we're talking real dollars. It would come flooding back into the United States. Economic growth that would be absolutely incredible. Even the detractors, some of the economists who are detractors of the fair tax, still acknowledge that under the fair tax, gross domestic product over a 10-year period would still increase by 11% compared to the current income tax system. And these are the people who are down on the fair tax. They acknowledge it would grow the economy.